Hey, this is Jack from Alpha Charts with a midweek video. Today is November 29th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions for in some of the equities I mentioned, your time frame and risk tolerance. So this video is specially made for my super follow group. Thank you very much if you are a subscriber. It's also the free view week, right? Thanksgiving, I'm giving a free view of my super follow content. So if you're joining us as a free view member, thank you for watching. I appreciate it. This preview will end this Thursday. So I gave Thanksgiving Thursday all the way to Thursday, so about 8 days or so the free view. If you are interested in becoming a super follow through the Twitter app, I don't think the desktop works. I think you have to go through the Twitter app. If you go to my homepage, super follow will be a link near the top. You just click on there, follow the directions. Super easy to do. So if you're interested, that's how you become a super follow. Let's get started. Midweek video. All right, so what have we noticed? We've noticed that the decline to 100-day moving average, and so far price once again has gotten rejected, right? And so that's something definitely to take notice of. You have this downtrend line, you have decline 200-day moving average, and this was close enough in my book for rejection. Is it, lights out at this point? I don't think it's lights out yet, but definitely not a very good look. You see volume coming back in, and it's definitely volume to the downside. And now you're starting to get those mixed signals, right? Declining 200-day, flat 50, short-term moving averages are kind of like, flattening out. This one's still going higher, but this one's flattening out, maybe turning lower. So again, you're just seeing a lot of mixed messages in the indexes, right? But when we look at the RSP, you know what? It's still above the 200-day. So the equal weighted SPX is still above the 200-day. It did find resistance at the downtrend line and in this green zone, which is in. But it actually was green on the day, but the SPX was red on the day. Again, there's a divergence there that under the surface, maybe things aren't quite as bad. Okay. Looking at the Qs, Qs were down pretty good today, 0.76. Didn't even make it to the 200-day. By far remains to be the weakest of the bunch. Equal weighted Qs down 0.3. Again, there is a slight divergence there, even though they were both down. The equal weighted product was down much less. Looking at IWM was green today. And I think this trend line we've talked about is going to be something that we have got to pay some very close attention to. If this 23-day EMA gets violated and broken to the downside, I think that there's going to be a lot of problems. There's your declining 200-day, which is trying to kind of flatten out a little bit. It's, rate of decline is decreasing. And so it's kind of like pinching in here at this point, right? And then it's going to have to make a decision either above the 200-day and this trend line, or kind of break down, and then we have a bigger problem to deal with if it breaks down. I don't know which way it's going to go, but this is definitely a chart I want to watch. And as you can see also, very low volume on this move higher here. It's concerning, right? Whichever way this breaks, I think probably the rest of the market's going to be following, and this will tell us our bullish or bear thesis right there, most likely. IWO, very, very similar, barely green on the day, just doesn't look super healthy right now. Has that same head and shoulder potential pattern to deal with. And there's your trend line and your declining 200-day. Again, we're starting to see sellers show up right at that 200-day. So that's one for the bearish case. Okay. But let's talk about our superstar. Our superstar is the mid caps at this point, right? By far the strongest of all the indexes. We'll see what happens in this area right here, right? This is definitely an area that its supply is being found, and we'll see if that continues, right? We'll see if it continues. Sorry, work is calling right now. Don't fight. Okay, I'm sorry about that. I just had a response from work. I do work full time, but I'm off today, supposedly. All right. So anyway, so the STAR is MDY, and it looks great. As long as it can stay above, there's your 200-day, right? So there's a line in the sand right here. It's beginning to flatten out, which is really nice to see. And there's a rising 23-day, a rising 50-day, and you have that double bottom look to it, right? So some people can say this is a head and shoulders top, or this is a double bottom. And we've talked about this before on different videos too. Basically it's either going to break above this area or it's going to break down, and that's how we're going to know. Okay. That is our star though. The mid caps definitely outperforming, and one of the nicest looking charts out there on the index level. All right, so let's go to I want to go into the sectors because we saw a lot of double bottoms being formed coming into this week. So let's check up on them and see how they're doing. XLP, there's a potential double bottom, and it got rejected here, but is still above a rising 9-day and hasn't done anything necessarily wrong yet, even though we don't love that it's pulling back on a little bit of volume. It's not doing anything wrong, and it could easily pull back all the way to the 23-day, maybe the $74-$75 area. And everything would still be absolutely fine and have a potentially bullish tilt to it. All right, that's XLP. XLI, again, all these have that double bottom look. This one had a little breakout. Yesterday was really gross, and it was definitely a failure of this breakout for now. I do like that the 23-day is only about 3% or so below, and so we're going to know pretty quickly if this is failed breakout or not. How fast does it touch and hold or not hold the 23-day? But again, above the 200-day, which is starting to flatten. Here's your 50-day zooming up. Again, maybe we get pulled back a little bit, but it's still a bullish look to this chart, as long as, I think first, there's $97 important, and then the 200 level, right? By that time, the 50-day should probably be caught up, I would think. And then so 93, 94, somewhere around there. That's XLI. XLV, right? Same thing, a little bit nicer looking, right? So maybe this comes back and retests the breakout and then can move higher. So XLV is, again, above now. Almost, what is that? Is that a rising 200-day moving average? Barely, but it is starting to rise. That's something nice to see, right? XLB. Here's materials. Again, it tried to break out. It did fail. We'll find out, inside day today. There's your 200-day. So that's definitely an area to watch. It's $79 or so. That's about where this 23-day should be in just probably by tomorrow. And so, price above it. And I think we could have a bullish thesis. If price falls below $79, I think you're more worried that the breakout failed, right? XLF financials. Again, Monday was ugly, but today was okay, right? This 200 is declining pretty good in the financials, but hasn't failed. Again, no matter how ugly yesterday was, it has not failed. Today, volume was close to yesterday's, but again, it's got to get above here for me to be bullish. And really, this 34, 35 area to me is the bearish. It's not that far off. Meaning we're going to know if we're going to, if we have a bearish tilt pretty quickly and pretty easily. XLE, going back to the weekly chart, we've talked about this weekly chart for a long time, how important this area is, right? And then zooming into the daily, and you can see, if it fails at the 23-day, that would be a problem. If we just chop sideways, okay, that'd probably be okay, right? But it can't fail at the 23-day. So right now, this $89 is the most important part for XLE. If it loses 89, chances are it's going to fall a decent amount more, maybe to 84, 85. But again, it takes some of that oomph out of the bullish thesis, right? Okay. And there's a lot of reasons for that. We have Fed coming up on Wednesday. That's tomorrow. We have China issues, right? China, harassing their people and really imprisoning them. That's terrible. And all kinds of other problems that the market is pricing in right now. So we talked about the divergence between SPX and RSP, right? So SPX was minus 0.16, and RSP was positive 0.32. And I want to go to the heat map, and this explains everything for you, right? You can see how Apple, Microsoft, Google, Amazon, Tesla, all these S&P mega caps, right? Johnson & Johnson, Lilly, right? United Healthcare. These are gigantic companies, and they were all red today, right? And so you see under the surface, there's a lot of green, but because of these gigantic companies are holding back the market, right? They're holding back the market at this point. So that is definitely something that I think is a positive, right? Because if under the surface we're having all these companies and people buying all these companies, and it's just the mega caps that are, kind of a drag right now, I'll take that as a positive, as breadth being expanding. Okay. Let's go to the internals now. Get rid of all these guys because I don't like anything but a line chart. My internals. There we go. And let's look at the VIX. So if all these problems were going to cause us issues, and all this concern and worry were causing us issues, I think we would see the VIX spiking up. But we're seeing the opposite. We're seeing lower highs and lower lows all along the way. And so we'll see if 2230-ish holds or not. But as of right now, there's nothing in here that looks concerning that volatility and the bearish tilt is going to continue. Credit spreads, right? So if all kinds of problems are happening in the markets, credit spreads would start to be blowing out. They are not. They came down again today. Again, they are kind of tightening up. Nothing is real volatile like we saw back here, right? So that's a positive, right? Put call ratio. Do we have an extreme? We don't. We don't have an extreme in the equity only put call ratio. That's a good thing, right? It tells us that we have people on both sides of the trade, and chances are the market is going to trend with that. Okay. Are yields, 10-year yields spiking? The answer is no, they're not spiking. Now, maybe they do. Maybe there's some kind of, bull flag in yields or something like that, and they're going to zoom higher. That could happen, and then we'll obviously take a much more defensive posture if that's the case. But as of right now, we really don't have that. Again, is this the start of that? Maybe not. But right now everything looks okay. DXY, the dollar index, continues to fall, right? Again, it did spike up recently, but overall, it's definitely in more of a downtrend since September, right? End of September, October. So that's a positive, right? Now, if we see the dollar going back up, chances are it's a risk-off scenario for equities. Something we're watching, but as of right now, nothing I'm concerned with, right? Let's look at our individual. So again, looking at the internals, nothing is screaming warning or danger or anything like that as of right now, in my opinion. So take that for what it's worth. Let's go and get these back on here, and let's look at our positions from the example trades from the spreadsheet. So first off, IBB, right? We talked about IBB, and if I do this, that's fine. Looking for a close above here, and then really a close above here because it's a beautiful base, as we've talked about, and volume in there. It's a trade that we've been in for a while. We sold some here. It's kind of pulling back right on our sell point, actually. We'll see what happens, right? Here's your 23-day. You have a nice little cross right there. Would love to see the bullish scenario play out. And I will add if it breaks above 135.50-ish, 135, 135.50, somewhere around there, right? So that's the good news. The bad news is if we get a strong break of the 23-day, especially with volume, I'm out of the trade. It's over. That's the way I play it. All stops are now in the money. Of course, we've taken a piece off of this one. First Solar, we closed this trade today at 161, so probably right near the low of the day, right? Yeah, the low was 160.91. So we did close it near the low of the day, which is fine. But if you look here, as it was moving higher, you had this decrease in volume, and then now you have a big spike in volume to the downside. Maybe it comes back, maybe it retests 145, maybe not. We made about 9.14, I think, percent on this trade. We did take two pieces off, one in here and then one down here, or maybe it's one up here somewhere, something like that. But we took two pieces off. And so we'll see. And maybe if this sets up again, maybe we get back in it again, right? But for right now, the trade is closed. Congrats if you were in it. It was a profitable trade. And that's our goal, right? To move our equity curves, right? So going forward, we'll just put it back onto the watch list. PI, that this one, there's again some selling pressure showing up in this one. And so we have to be aware of that. But overall, pretty good accumulation volume and bucking the trend of the general market. So hopefully once the pressure is off of this one, and if you go to weekly, you see it's at all-time highs. So once the pressure is off this one, hopefully this one will zoom higher. And again, we will try to sell into strength as it moves higher. Then as it sets up again, we will do our best to trade around the position, correct? All right. That's the goal. Again, this stop is already in the money, as all our stops are. Steel Dynamics. Here's this one. This one was looking really good. Love this little cup and handle that it had right over there. Little tiny one. And it's not doing anything quite wrong yet, right? It's this 101-ish area is probably the important area. So that's where we're going to manage risk against. I think I may have actually increased that to 102 just because the markets are getting a little on the wonky side. It's close. That again, 101 to 102, that is where I would definitely want to manage risk against. If it broke below 101 and definitely below 100, it's definitely an out. But definitely I want my stop at break even. So that's where I have it, or better. So Steel Dynamics, again, I love the look of this chart, and this may just be coming back to retest this area. It's very possible, but with the mixed messages that this market is giving us, I would much rather be out of this trade at break even and wishing that I was in it than in this trade wishing I was out of it. Okay. And it's really important to understand that, because that comes back to the psychology of the trade. If you're bleeding money, if this trade is going against you, you're going to be angry at yourself. You're going to try to revenge trade. You're going to do maybe even come back, and trade either whether it's this name or a similar name with a less than stellar setup, trying to make that money back. It's going to be really, really bad. So again, if I go to cash on this one and it stops me out for just north of break even, that's fine with me. It's no big deal. And again, there's a lot of mixed signals in this market. My bias is that we're going to have an end of year rally, right? We have about 4 or 5 weeks into the end of the year. That's my bias. I think from what the internals are telling me and from what I'm seeing on the indexes and the sectors and subsectors, I think we get an end of year rally. I could be wrong. So right now I'm about 50% invested. That's it. I have I'm keeping about 50% in cash. I'm looking for setups, and you know what? Maybe this pullback that we've seen at the beginning of this week, which again we talked about in the end of week video on Sunday, that we were expecting pullbacks, but we have to see these pullbacks hold, right? That's the important thing, to see the pullbacks hold, because again, I'm gonna pull up. There's a few things that we were looking at, like ARY. This looks great, right? But now this pullback needs to hold, whether it's at the it busted through the 10-day, which is not really a characteristic of this name. And then here's your 23-day, right? And there's your VWAP from the gap. So again, we have to see this hold. And volume is a little bit higher than what I would have liked. But overall, it's a great looking name. Now let's see, what happens. AEHR. There's another one. I'm just gonna take a couple. This one was up today. Look at this. I mean, it looks great. 10 days catching up. There's your I mean, this one's probably pretty close. Nice tight little 4 days in a row right there. This one's not bad. I'm gonna have to look at this one a little bit closer. AHR, let's see, MTSI. Yeah, I shouldn't be doing this right now. Yeah, this one's kind of falling apart a little bit, right? So anyway, point being is I should look at this one too. Yeah, it's kind of falling apart just a little bit so far, but lower volume, which is kind of nice to see. So we need to see these names really kind of start to dig in and hold. And if they can do that, then I think it'd be time to maybe put some more money at risk. Right now, as things are stopping out, I'm raising cash, right? I'm raising cash. First solar money that stopped out today, I'm keeping as cash. I want to watch the market and and really make sure that we are moving higher, and we only know that by what price does, right? The price movement. Again, all my stops are break even or better, and I can't say that enough, because that's the way that we move our equity curve up and to the right, by losing very little or nothing on trades and capitalizing when we do get positive movement in prices in those little spurts. And again, we may be starting one in the next starting over the next 3 to 5 weeks, but time will tell. All right, thank you for watching. Appreciate you guys being super follows, and if you're not, check it out. Hope you're liking the free view this week, and we will talk to you soon. Bye.